Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today I want to give you my weekly update for week 36 of 2021 of my real money portfolio. And today it will be a short update just because I'm very busy this weekend and so it's not that long as normal. And so just jump in. So first of all, my portfolio have a performance since the start at the 2nd of December 2019 of 64%, which is an outperformance of 21% to the S&P 500 and almost 40% to the Dow Jones. The topics today are my transactions last week, the received dividends, then I will take a look what I will buy next week, and the performance overall. So let's go. But before we start, don't forget to subscribe and ring the notification bell to never miss another video, and then you can join me on my road as a long-term value investor with full insight to my real money portfolio. So transactions last week, that's very fast because I did nothing. But I received dividend last week because I got my $38.45 of Pfizer, and of course one of the winner of the pandemic situation just because of the vaccine. And so I received my $38.45, and that's fine, a little bit of cash flow in my portfolio. What to buy next week? Here's a pie of my whole portfolio, and as you can see, I have a cash position of over 23%, which is quite a lot. And if you follow me for a while, it's difficult to find good investments in this overall very high valuated market. In this environment, I just try to stay with around 20% of cash. Now we are at 23% of cash, and so I will deploy something next week. The question is what to buy. Since it's really difficult to find good new investments for good businesses for reasonable prices, I just look at my portfolio and thought about where to add. And just to have an overview, I have an Excel sheet for that with all the positions in my portfolio, the current price, my buy price, my calculated intrinsic value, and the distance to the intrinsic value. And so MI Homes, for example, is undervalued 48% in my view, Alibaba also 48, Tencent 39, and so on. Marked Alibaba and Tencent red because in this moment I will not add to these positions because my positions in Alibaba, Tencent, and also Baidu are already around, let's say, 15-16%. I will not add right now to Tencent and Alibaba. Maybe if Baidu will drop back a little bit, I will add to Baidu to come to, let's say, 5 or 6% of my portfolio. But overall, I don't want to be overweighted in the Chinese market. I'm happy to be invested in the Chinese market, but I don't want to be overweight because, of course, next to the chances, there are also high risks. And so I will decide next week between MI Homes. As for every business in my portfolio, I made a deeper analysis of MI Homes earlier. You find the link to this video here up on the screen or on my channel. And MI Homes is a home builder, and it really seems like it's incredible cheap because the P ratio currently is only 5. And when we look at the financial numbers of MI Homes, in my whole analysis of MI Homes, I go deeper into that. But when we look at the last 5 years and the revenue, it just grew from $1.5 billion to currently $3.5 billion. So an amazing growth in the revenue. And the same picture in the earnings per share from $1.76 to $11.68 right now. Really, really nice 10 times growth of their earnings per share in the last 5 years. Really good, very good management, and so it's very likely I will add to MI Homes because I think when I calculate the intrinsic value, it's around $120, and so it seems like it's really highly undervalued. Of course, there are risks, higher interest rates, for example. All of this you have to have in mind, but the chances are higher than the risk, and so the risk reward ratio seems pretty good on these levels. And so I will add to MI Homes or Intel. Intel currently is traded at $53 with a P ratio of 11, almost 12. Also looks very cheap. And so Intel, even with the high competition by AMD, is still by far the market leader in the CPU business and also still an absolutely cash flow machine. Here we see the free cash flow per share, which is actually $3.94. So they earn money even if they have some problems or had some problems in the past, but it's still a high profitable company on a very low valuation overall. And with a chip shortage, especially in the automobile sector, in a bigger growing market, new management and high investments, I'm very sure that Intel will be a very good investment over the long run from the current levels. And so I will decide next week to invest more money into MI Homes or Intel, maybe both. We will see, not too much, maybe 1% more of my portfolio, but at least a little bit, just not to stick with 23% of cash in my portfolio. And we will see how this will work out. You can see that every week here on my channel. And as for MI Homes and Intel, you can find deeper analysis and full analysis of the businesses of all these companies in my portfolio. Feel free to check this out. And with that, take a look at my performance overall. Here you see every business in my portfolio, and when we look at the single performance of these stocks, then we see that Imperial Oil is the best performing stock with almost 82% of gains, followed by JP Morgan, Ledger & Platt, Bank of Nova Scotia, and so on. And at the end of the list is Tencent and Alibaba. Of course, I think everybody know the problems and the fear of the regulation of the Communist Party in China, and so maybe I was a little bit too early to buy in the first place, but I will stick with both of these companies because they are just great companies, very profitable, and sooner or later I'm very sure they will come back, and overall, over the long run, it will be good investments. And just to make this complete, here also my closed trades since I started this portfolio at the 2nd of December 2019, just that you understand where the performance come from. And here you see I had very good trades with Caterpillar, Walt Disney, Stamps, and so on. Just want to show you that in case you are new to my channel. And with that, I made a performance, as I showed you at the start, of 64%. And that's of course very good for me. Over the last few months, it just stagnant on a very high level, like the whole market, I would say. And so we will see how this will work out. If you like the whole idea, then just join me and follow me on my road as a long-term value investor. That's it for today. See you the next time, then again with another analysis of another stock, and every weekend, of course, with the update on this real money portfolio. Thanks for watching. See you then. Take care.